Okay, so this is another review for the Live Trade Signals room. I'm going to do this a little bit differently because this is actually in response to an email that I got from the last email from last Thursday's review saying that I just cherry picked a good day, and which I always get a kick out of. But you'll see, so this is today. Today is Tuesday, September 25th, and I can't make this up because you'll see everything time and date stamped. Every day is the same. The only difference is some days we make a lot more money than other days. And that's really what it comes down to. These price levels I developed back in 2007. They are extremely uncanny, and there is a way to trade them that is highly effective. You do not need indicators. You do not need a bunch of squiggly lines on your chart. You do not need to even really know chart patterns, for that matter. None of that stuff matters, because when you boil it down, all the market cares about is price. So this morning, and before I jump into this, try to put this in perspective of money. Regulations are such that there are certain things I cannot say about earnings, etc., which really drives me crazy, and I know it drives a lot of you crazy. So those of you watching this are smart. Do the math in your own head, and it's a simple calculation. Every point on the ES is $50, and you just multiply that by contracts that you trade. Some of you have big accounts, and some of you have small accounts. The math is the same. So you'll see very quickly that, people ask, why do you charge so much? Well, what we try to do is price things at a realistic price. That one, it creates value, but also the amount that we charge monthly on any product honestly should be the amount that you should target to pull out in a day minimum, in our opinion. But again, I don't want to cross the lines of earnings here, so you're going to have to do your own math. So I'm going to walk you through this fairly quickly, but it should be very obvious. If you've watched the other videos on the Live Trade Signals room, it's not complicated. There's prices that we use for buying, and there's prices that we use for selling. That's it. So we get in and we get out, and then there's other prices we use for shorting the market, period. So this morning, 13 minutes before market open was the first post. So at 6 minutes before market open, ideally 26.25 would hold for buying. I'm going to actually show you the whole, well, it's not actually the whole day, but a majority of the day, because rather than go candle by candle, just in the interest of time, we're just going to get right down to it. Okay, 26 would hold for buying. If that target gets taken out, then we probably want to reconsider buying for a bit. Okay, what does that mean? It should be very obvious, even if you're new to trading. And I'll pull that up in a second. So a price of 26, this is that price here. I'll show you. Market opens this darker area. That's the RTH, regular trading hours. Okay, so we're looking at this price here, 26.25. This should hold for buying, but if it gets taken out, we're probably going to want to put buying on hold. Okay, so let's see what happened there. Okay, so what happens when if this is your first video you're watching, when you see a price, stick it on your chart, just like I've done here. It should take 2.5 seconds to do that. Okay, I don't know what charting software you guys use. It doesn't matter. In fact, you don't even necessarily need to have charting software as long as you can keep track of prices. You could even just do it from a dome, like a trading dome, or anything that you can execute trades from. I prefer charts. I like to see what's happening. So this price level was given all the way back here. This should hold for buying. It went to the tick. Because these price levels are so accurate, we're usually going to be within a couple ticks with our entries of these lines. Okay? Do they always go to the tick? No. But a lot of times they do, and we want to make money, so we're going to place our order one or two, generally two ticks above and below on both exits and entries. Okay? So we're going to buy this. You don't have to buy a price. You don't have to sell a price. Okay? These price levels, this is what we're looking at real time. This was given out at 24, so on this candle right here, real time right now, if price gets down here, we're going to buy that. Okay? The next post happens 6 minutes later. Aggressive short 30.75. This is just for the pullback, so it's pretty aggressive. So we got so at that time we got 2 ticks away from that. So I do not know if you would have been filled on that short. So forget about this right now, because we're in real time. It would have been right here. Okay, you can place your limit order there. a couple ticks below, may or may not have been filled. Some traders, you could do an MIT, market if touched. It's kind of the same thing as pulling the trigger when you see price reach at or near a level. So if you got into that short, then that would have been quite nice. This long went to the tick, so let's see what the next post was past that time that we finally got into that long position. Okay, so buying here, which is what we're talking about, is pretty aggressive as well. Really could come all the way back to 20 area before going higher. Okay, so what does that mean? Well, that means that before we get any higher from this area right here, it's possible that we could get down to the 20 area. And so that's what this rectangle represents, this blue shaded area. So it's not an exact price, it's an area. So what I did was I put a shaded area between 29.20 and 29.21. That's the 20 area. So I would be anticipating price to come down here. So if I'm short, then I'm probably going to want to look to take profit down here. Okay? Why? Well, because if we're going to go higher, it's probably not going to happen until we hit 20 first. Okay, we don't know that it's going to happen. This happened an hour and a half after we said this is what we're looking for. And what happened was exactly that, except for the fact that we did not go higher, which doesn't matter because we're short all through this. Doesn't mean that you can't try it, just want you to know it's aggressive. Okay, so you have to realize that there are positions that we take that are less or more aggressive than other trades. Okay, and so if it seems aggressive, then we'll type aggressive. That's what the AGR means. Okay, so at 7:35, 5 minutes after open, if you sold, it was really just for 26.5. Okay, so that means that if you are short here, then you're going to want to get out because we're already looking to buy this, right? So if you're short, take your money. Now get in long here. We already decided we're going to buy this. Okay, so then the next post, 6 minutes after that, 29.75 would be the most conservative take profit, and taking out 30.75 would be good next step for higher. Okay, so 29.75, which was right up here, we got 2 ticks away from it. So you would have had to, really play that right because we did get only 2 ticks away from that price, and we never reached the 30 area again, so we never went higher. So in this trade that actually happened, you would have been filled if you did not get out here and you decided to hold it. If you didn't take profit anywhere through here, this 3 points that it gave you, almost 3 points. The worst that should have happened is a break even, maybe take a small profit because we get back down to the line at 7:49 and we don't breach it until 8:07. So we have about almost 20 minutes or so to pull something out of that trade. If not, okay, this is not working out, I'm going to wait for the next trade. Trades happen like that sometimes. Okay, now this is assuming that you pulled out of your short and you're not going long term for this. Now this is a little bit more advanced comment that I'm making, but some of our traders trade 2 accounts. One account is only for long positions and the other account is only for short positions. For a lot of traders that baffles their mind, but hopefully you can see why we would want to do that. If we're going to get in the market short and we have a target somewhere, and we already showed you where it was, in the 20 range, then we're going to hold those short positions to see if it works out like that. In this case, it worked out like that. And all the while that short position's in, we're going to scalp long positions. So this trade, this long that happened right here that we just took, okay? You made a little bit of money or you broke even. Okay, it just depends on how you traded it. Now, was there any indication to pull out of the short? Nope. Lower highs, lower highs, lower highs. Nothing's being breached to the upside here, and we already have a target at 30.75 to look for it to be breached to go higher. We didn't get anywhere near that after this first drop. So this should be very straightforward. The next post at 48, which was 7 minutes later, taking out 26.25 should get to 22.25. What does that mean? Okay, you notice I made a note here. Watch for break to target 22.25. Okay, that means that I can trade breakdowns to get to that level. I can find a way to get in the market short to get down to the 22.25 level. Okay, that was posted right all the way back over here at 48. So before price even got, well, I did get there to the tick, but this price level now becomes a level that we are watching for this to break. So it did break. Is it going to hold? That's the real question. So we can try it. We can try a breakdown, right? So we're in short somewhere in here, and this is a very, very, very long trade. You would have had to hold this thing. It finally broke through at 58. So you're looking at an hour and 10 minutes. That's a very long time to be in a trade, unless of course you are holding swing positions. That's nothing. But you would have had to be in that trade for over an hour before that thing worked out. Now there's not a lot of panicking because we're just kind of pivoting back and forth between this 26.25 price level. Okay, but we already have our target. So as long as everything's looking good and we're not, getting much past any of these highs here, then it's usually going to be a safe trade. And so we put on that risk, and sure enough, it hits it. In fact, it breaks through it, and it gets down to our 20 level. So if we're still in short from up here somewhere, then we're going to take out here. The reason why is because, as we mentioned earlier, if it gets down here, as we mentioned earlier, if it's going to go higher from here, it's most likely going to hit this first before it does. Now, obviously, we can see after the fact it attempted, but it didn't happen. So we get out here, and so we know, we don't have to tell you, okay, now buy. Sometimes I jokingly say, short of clicking the button for you, I don't really know of anything else that's much easier than this. So we get out of our short, try a long here. Okay, you're up many, many, many points. Again, do the math. It's somewhere between 8 to 12 points, depending upon if you took this one and what you got out of it, and if you took this one and what you got out of that, or if you held it, and if you took the breakdown. So there's a lot to be made during this time and a lot to do. Okay, just these prices are very accurate, as you can see. So now what? So we look at what the next post is. So at 49, 22.25, which is this one. Okay, again, that's our short target. Actually, let me back that up. Let's go back to this real quick. Taking out 26 should get it to the 22.25. Then we will see, but until that happens, 35.25 will be the next up. So if we are going to go up, we're going to be looking for 35.25. It didn't happen because we never breached the 30.75. So that scenario didn't play out, and it doesn't matter because there was no trades there. Okay, so 22.25, then watch the 20 area. Okay, mention this again. And much lower would probably be down to 14.5, but could pause at the 17 area. So 49, so that was posted all the way back over here. Okay, that last post was made right on this candle right here. Okay, so over an hour before it actually even happened, these prices were given. So as the market's changing, some people say, well, look what's happened. We've gone sideways now. What do I do? You don't do anything different. These prices will be good until the market goes well below it or well above it. We already have the upside scenario and we have the downside scenario, and we're playing shorts. By the time it gets down here, we're out of our shorts and we're going long, and we're going to stay long until something doesn't do what it's supposed to do, right? Okay, and then the last post of the day, above 35. So this is still back over here, or let's see, 52 is going to be right here. So we're still kind of sitting on this 26.25 price. So the last post is really just a reiteration of everything that already happened. 35.25. So above 35.25 is 45.25. So that just means that if we have succession above 30, we will get to 35.25, and beyond that, the next target would be 10 points above that. Those are the price levels to the upside that we are looking to target for the market to have a reaction off of. And then 47. So likely some pullback from 35.25 if we get up there, but the market used this 25 or 26.25 and could get higher. So usually that means lower first. Okay, and that's exactly what happened. Okay, now we did not get higher and none of that matters because it didn't happen. So some people ask, that use these price levels, well, I've got a bunch of lines that are 40 points above and 40 points below. What am I supposed to do with those? Well, you're not supposed to do anything with those until the market gets there. You can't buy Apple at $5 when it's trading at $2.22. It doesn't really matter if there's a bunch of price levels above us or below us. All that matters is where is the market trading and what are the most immediate prices that we can take advantage of. And that is it. So in a recap, this turned out to be longer than I anticipated. All of these prices we are going to do something at. We are going to either enter the market short or long, or they're prices that we're going to use to take profit, period. No indicators, no deciphering what chart patterns we see, etc. All of those things happen in spite of these price levels. The market's going to test these levels day in and day out, every single day, just like they have since 2007, which is why this is so effective. The market has not changed. The market, in fact, if you went back to the beginning of when you could chart markets, it does the same thing. And so we just take advantage of that. And so we just have to show up, be present, put the lines on our chart, get in where we're supposed to, get out where we're supposed to, take profit where we're supposed to, and just repeat that every single day. And this day is no different than the prior day in the video that I showed you before. It's no different than it will be tomorrow or 10 days ago. It's the same thing every single day, and we just repeat that. And so as you repeat this process, you get better at it. And the great thing about this is you don't have to learn an indicator or what a moving average is doing or interpret a wedge, or is this a wedge or not a wedge, or is this a head and shoulders, is this not a head and shoulders. None of that stuff matters because the market's going to move with or without those formations, and it's going to continually test price levels over and over and over and over and over again, day in and day out, and it never stops doing that. And so all we are doing is getting in on that repetitive habit that the market does of testing, retesting, breaking, retesting price levels over and over and over again. And that's how we extract cash in the market every single day. You should never have a day where you're down. Here I go again, kind of in the gray area of making claims. But just look at the simplicity of this. It's not difficult. Put the lines in your chart, you get in, you get out, you wait for the next trade, you get in, you decide if you're going to hold it or take whatever you can get. If you pulled out of this trade here and then you saw this happen, you made money. You should be happy. What is down here that you could then take advantage of? Well, we have this area that we know that was mentioned over an hour before it happened. In fact, an hour and a half before it happened, that if we are going to go higher, it's going to get to here first. So it would make sense to attempt to buy there, right? What's the risk? The risk is really nothing at this point because you should be up multiple points on the day, and we've had a pretty good run down. Well, let's try a buy down here. We know that there should be some support, and we should try it. Where do I target? The room's done, way done by this time. Where do you target? Where do you take profit at? Well, obviously that's up to you, but what I like to do is I like to use one of the price levels that we've already used. Why? Because the market is most likely going to retest those. So how about up here? Or maybe you're new and you're a little afraid of taking profit or letting winners run. Grab a point and book that profit for the day, and then trade the next day. But that's it. Day in and day out, do the same thing. It might take you a week or two to get the hang of it, but beyond that, it should just be very repetitive. And then at some point, it just becomes a habit. You know exactly what to do. Here's these price levels that we give out, and you know exactly how to trade them. So that's a wrap. There's a link below the video where you can join us, and we'll do it all over again tomorrow.